Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So while the Forex market has no break on the holidays, as you know, the gold market has got it. And after the Thanksgiving, once the markets returned back to the life on Friday, it was really a bit chaotic performance on intraday charts. Its first reaction on the Omicron variant, and well, actually, it just totally fills the patterns that we have specified before the Thanksgiving. So we said this market is ready for a possible pullback and keep an eye on a possible intraday bullish pattern that could trigger the pullback. And in fact, we've got the double repo that we have discussed, and it has been completed perfectly. But as you can see, despite the collapse of the interest rates on Friday, this temporal success on the gold market has been played back very fast. And the result, we have the spike up and return it back down. So in general, this picture, well, difficult to call as a bullish. At the same time, the overall downward action, despite this very strong sell-off, it doesn't break yet the bullish performance in general, because market has hit the OP. Yes, reaction is a bit strong, but in general, market stands above the major 618 support. And from that standpoint, this reaction in general fits to normal price behavior and a response of the market to OP target. So at the same time, with a strong downside momentum, our basic scenario for the beginning of the week, we suggest that market still could reach the 1758 major support area, where we intend to keep an eye on the possible bullish patterns that might be formed there. Because today we spent a lot of time discussing on what consequences could bring the appearing of the Omicron and what impact on the market it could get. Well, whatever scenario we will have, either the light scenario where market will return back to the normal conditions very fast as it was with the Delta, or it will be a bit worse scenario where some temporal lockdowns will be something that will be even more supportive to the gold. Because take a look, if we will take a look at the general pandemic, how it was developing, here is, guys, actually the performance of the market with the pandemic that has started right here. So you could see pandemic widely starts by the end of the 2018, and what has happened with the real interest rates, what has happened with the gold. So you can see. So, and if here will be some lockdowns again and some slowdown in the global economy, the interest rate changing will be cancelled or postponed. This again will be run into the quality, and real interest rates will keep staying under depression. So this will be somewhere in the bottom with the negative territory that will support the gold. So that's what will happen if the negative scenario will prevail. But for the truth's sake, if you'll take a look at overall performance with this hidden divergence, if we will mention the technical factors, it's more probable that world hardly will return back to the lockdown era. So currently, markets are hiding, and in general, the global authorities has already stand in such period where we're just living with that. So this is new environment, new reality, and you can't hide from it using the lockdowns. That's why whatever it will be, the total lockdown that was widely spreading across the globe hardly will happen. So it means that whatever supportive effect will be, if it will be at all, that will be probably temporal. So more probable that we return back to some normal conditions relatively soon, I suppose, and to the markets, to the conditions that were before the announcement of the Omicron. And this background we have discussed many times in our weekly reports. So we suggest that gold still could keep chance on the further upward action, just because the inflation could stand at high levels, while the Fed give markets time and a bit slow down with the changing the rates. That provides some background for positive action on the gold market. That could happen. So that's what about long term. For more details, you could read the weekly report. In the shorter term, what we could say in current situation, as I said, our basic scenario is waiting for a drop to the next support, just because of the very strong sell-off. And this sell-off definitely is enough to complete even minor targets. So if we'll take a look at the 4 time frame chart, we have here A, B, C top. This is, by the way, our double repo, works nice. And COP, it stands at 1754, almost 1755. That perfectly agrees with the 1758 of the daily major 618 support. And as I said, this strength of this sell-off is quite enough to just reach the COP. It's really possible. The one thing that we could argue about is the way how market could turn down, because we know that, first of all, take a look. Once again, this is real interest rates, but if we'll take a look at the nominal interest rates, the 10-year, you could see that on this week, market has formed a bearish reversal candle. It will be supportive to the gold, and it could mean that, well, interest rates could drop a bit more, and that will be supportive to the gold as well. Meantime, even the strong collapse, so if we'll take a look on the daily chart, you could see that what collapse has happened. It's really very strong drop here was. As you can see, very significant decreasing. That has led on the gold market not for too significant action. So yes, we've got the completion of the double repo, but it was not as strong, right? So it means that if here we could get some continuation maybe, on the gold, hardly it will be very significant appreciation of the price. That's why in the case of interest rates will start dropping a bit more, we're not excluding the chance of the ABCD upward retracement. So market could show another leg up. Besides, the deep retracement and compounding retracements is the habit of the gold. So it's typical for the gold market. We also should keep an eye on this possible scenario that could develop. But in the longer term, potentially, as you probably already have seen on the weekly chart, potentially we have kind of the reverse head and shoulders pattern on the weekly chart. And it means a lot. So if it starts to work and rates will start rising, that will definitely be bearish sign for the gold. But if it will fail, market drop below these lows, well, that will be absolutely different story. And currently, a lot of depends on this new variant and how well market will treat the hazard of this new variant. So we should know it within 1-2 weeks probably. How we could use this for trading in particular. So first of all, for the bulls, we do nothing, and we are waiting for reaching 1755, 1758 support. There, it starts to third chance to go along if market will provide some reasonable background for that. Currently, setup exists only for scalp bears, so for those who trade on intraday charts and those who consider taking the short position. Here we could combine 2 ways of action. So first of all, you could use stop sell order around the lows, somewhere around 1780. So you could place stop sell and just watch what will happen. In the case of direct breakout, you will step in right in the moment of the breakout, and your target will be COP. In a case, if market starts ABCD retracement, your order will be unfilled, and market just keep going higher. So in this case, you could consider 1850 as a potential entry with the Gartley's triple to sell that might be formed here. And this is 2 scenarios that you could combine, or you could follow. You choose just single of them. Just avoid the fast appreciation. So if you will see with this type of action on Monday, just do not take short position. So it means that market is still nervous, and well, it would be better escape. Do not better to escape and just ignore this possible bearish setup that we have. So that's what we intend to keep an eye on Monday, and then we will see how the situation will develop.